Deputy Murphy.
Thank you, Chair. Thank you to Mr. Moore and to your officials for being here today. I think, just following off from what Deputy Deasy was saying, I mean, one of the benefits of this committee and what we're doing today is to try and bring clarity to a lot of what is happening in the department and in the country and in the wider economy. But following on from that particular point, and Deputy O'Donnell raised it earlier, I just wanted to clarify something for myself. You said in relation to what was happening, I think, with the ESM and talks around banks, or Spain's banking debt, that it was our policy to retrofit any new policy measures so they would ease the banking debt that was put on our sovereign. Is that correct?
Not just that, I think to say it's our policy is perfectly incorrect. I think that if there are new issues that are coming down, as you're aware, the process of dealing with the European crisis, which has been going on for quite a long time, has tended to be the introduction, not necessarily in a one big bang approach, but rather on a sort of step-by-step basis of amendments to existing policy tools or indeed new policy tools. And the reality of the situation faced by Ireland is that the banking crisis that was faced by Ireland was one of the first in Europe. And the aspects that were dealt with, frankly by people before me, but the aspects of the crisis and the problems that were faced led to the introduction of policy measures here in Ireland and the utilisation of toolkits that were available in Europe at the time, that were probably not, even by relative standards to what is available today, as fit for purpose then as the ones we have today. It is certainly a matter of great speculation in the press around other banking crises which bear some parallels to the situation here and could in fact lead to some of the same issues that have followed on our own implementation of measures for the banking crisis could actually lead to similar problems, that in fact there is speculation that new aspects or new tools might be brought to bear to alleviate the pressure that domestically dealing with a banking crisis might cause, which might not occur if you were to deal with it on a more pan-European basis. And I think if those tools become available, it is absolutely essential that we try and position ourselves to be able to take advantage of those, to do what I referred to as retrofitting the tools that we have, to see if in fact it gives us a better result than we would have.
But are we the only country in Europe at the moment to have taken on banking debt into sovereign debt?
No, I mean the Portuguese did it earlier this week. I mean,
to what extent did they do it though?
Well, the requirement of their banks was another 6.5 billion at the beginning of the year. I think there's also a lot of discussion ongoing as to what in fact will happen in other countries like Cyprus, who are faced with similar crises, and in fact as a percentage faced with very, very significant, by GDP standards, even though the actual absolute amount is very small.
But it's ourselves in Portugal at the moment are the only ones who so far have done that, to take on the banking.
Well, each of the other countries are able, because they're not actually in a program, to continue to borrow money on their own. So you can see in Belgium, in France, in Germany, they've been able to take the debt on at the sovereign level without necessarily doing it in the program. So it is fair to say that the banks have either been capitalised by states in other countries, but not in the same way as us through a program.
Okay, sorry, just then to clarify that point then, the reason this has arisen in terms of questions around our own banking debt is because of the moves that are happening in Spain if it were to avoid having to take, as part of its bailout program, any banking debt onto its sovereign debt. Is that where that's coming from?
No, I think that for quite some time we have been making the case, as indeed have others, frankly, but we are certainly supporting it. I think I may have said this as early as last year at the Bankers' Federation, that the appropriate way to deal with domestic banking crises, which are significant in size relative to the size of the country, is to do so on a mutualised basis. And that should apply in terms of the guarantees of the debt of the banks, the deposits of the banks, and in fact, in an ideal world, the capitalisation of the banks if required. And the resolution of banks that run into trouble should occur in Europe in many ways similar to the way it occurs in the United States, or indeed in England. No one would have expected the city of Sunderland to have been required to bail out Northern Rock. It was handled at the centre of that currency union. It's the same thing that happens in the United States. The states in which the banks are headquartered, whether it's Delaware or North Carolina, are not responsible individually for bearing the sole burden of capitalising banks that happen to be situated in their location. Europe has been asked by many people, including ourselves, to continue to move forward in that direction as being a better way to handle this process. And it is the case that in a relatively quick manner, the crisis of the Spanish banking system has got more and more acute, and that therefore the same type of issues that would have been part of a debate by ourselves in respect of the bank debt for quite some time are now also in effect being shared as debates between, I'm sure, my Spanish colleague and the same people around the European agenda as we're talking to.
Okay, thank you. Just to move on to something else in relation to the bailout programme that we're currently in. How much funding is left in the programme?
I think we are at about 67 billion or so has been drawn down now at the moment. I can confirm that number for you, but I think that's about it.
And the funding that's left is due to run out at the end of 2013?
We will, I think I made reference earlier to what I refer to as a refinancing wall at the beginning of 2014, which is really the key point for us, is that there is a remaining refinancing obstacle at the beginning of 2014 that we do not yet have either available funding or cash reserves to get us through that.
Okay. And so you were talking about dipping our toes back into the market prior to then, obviously, to see if we can raise on the markets ourselves, and that's going to happen. We're going to try that this year.
Well, this is managed by the NTMA, so I mean the right person to answer that question is John Corrigan, but I think the Minister has also stated that as an optimum result, were market conditions to allow that, and of course we are, even in the last 3 or 4 weeks, in a different place than we might have expected to have been 3 weeks ago, were market conditions to permit that, that I think would be the right way to do it. As you may be aware, the IMF process around the programme is always looking for about a period of 12 months to the end of the programme to make sure that, in fact, the state has financing to continue to allow drawdowns.
Okay.
So I think it is important, as indeed with any re-entry, market re-entry, to start achieving market access in a limited way. There are two choices. You can either do a big bang or you can do it that way, but I think most people would say that you're better off to do it that way.
In a limited way?
You start in a limited way.
12 months in advance, say, that funding wall, 2014. Yeah. And at what price are we willing to enter the markets at, again?
Again, these are issues for the NTMA.
But you must have a view on it, or you must discuss it with the NTMA.
Well, I mean, we have a sort of, another change in the way we're running the sort of the debates around the department and indeed these kind of issues, is we now have introduced a new sort of funding the state committee, which will involve the people that actually will be able to have these type of debates about how we actually approach using our available assets to access funding better, funding infrastructural developments, and indeed, frankly, getting back into the markets.
But, I mean, things like the funding of the state, I mean, it's really that central to your role as the Secretary General of the Department of Finance, and things like managing the budget and the adjustment that needs to take place over the next 3 to 4 years.
Yeah, which is why one of the reasons why I've actually done, as I said earlier, I think it was to Deputy Ross, that one of the things that I wanted to introduce in the department, which was not there, were a lot more fora at which issues like these could be debated among the senior officials of the department and the other relevant stakeholders, so we can actually do it. And you are absolutely right. Funding of the state is a key part of the role of the department and needs to be looked at in a much more holistic way, which was in fact what this committee will allow us to do.
But you must have an idea now, as you look at it, given that we're going to be going back to the markets within the next 6 months, at what kind of rate you think is affordable for us, given what we need to achieve.
Yeah, well, I mean we have a sense, but there are decisions around that relate to the policy decisions of at what rate the government will go. Our job will be to assess the impact of that on, for example, the sustainability of the debt. It is clear that if you were looking at the spreads we're at today, which are sort of close to 7%, we wouldn't be doing that. Mm-hmm.
But what's the rate from the ESM?
The ESM rate will be effectively, I think, the same. It's like 3.5. I mean, I can get that exact rate, but the programs in Europe, and this is an important point, are now designed after the changes of last year, not to necessarily be penal rates for countries, but in fact actually to be rates that give those countries the time that they need and the breathing space to restore their economic position to the point where they can go back into the markets.
So it'll be probably somewhere between 3 and 3.5%.
Yeah, I just don't have the number. I would assume.
I mean, it's highly unlikely that we'll be at that point in terms of when we go to the markets, say January of next year, that we'll be able to get funding at that price.
And the choice that you have to do, which is why I say it is really a choice and a debate, ultimately for the NTMA in terms of advising the government, is the trade-off between, in effect, independence on your funding, which is that you trade in the market directly, and continuing with the existence of a program or the ESM funding, which will, if the structure remains, cheaper funding than, in a sense, market access. Then you may still want to go for more expensive funding because it actually gives you back, in effect, economic sovereignty.
And so will these new structures then be coming up at that price, I suppose, what we're willing to pay to exit the bailout or to exit those kind of conditionalities?
If you look at the situation of the existing countries that are under some speculation, okay, as to whether they should not be in a bailout, okay, all of those countries have issued debt in the last number of months, indeed for some period of time, far in excess as a cost of the cost of the bailouts. But they prefer to do so as part of operating independent treasuries, rather than take the sort of the economic gain of actually taking the cheaper funding.
Our funding in the bailout...
It's ultimately a policy choice of
Sure.
my deputy as to which preference the government, and we can advise on what is the impact on different debt sustainability, on what are the other measures that may be needed if you choose a funding that's more expensive than the program.
But the actual funding in the bailout runs out at the end of next year, but we'll still be in the program until 2015. Is that correct? In terms of the conditions we have to meet.
Yeah, I mean...
So in 2013, we won't have achieved, we will have returned sovereignty to the people, if you like, because we'll still be in the bailout to 2015. But we'll have access then to new funding.
The bailout is funding available to us.
With conditions, though, with conditions that last to 2015.
But the conditions are conditions that we would be saying we should be doing in any event, whether there was a bailout or not.
Well, why not borrow at a cheaper rate under the ESM under the cover of those conditions?
Again, there are options available to you.
Okay.
I mean,
but it's being considered.
One will consider all options at the time as to what's right. I mean, I can't speculate today as to what advice I would give the government about the policy choices in 2013 when we don't know what the market rates are.
But I mean, in fact, the policy choices that are facing us much sooner than 2013, because we're going to be dipping our toes back into the markets 12 months in advance of that. So this is something that's being considered now.
Yeah, I mean, the NTMA is the forum of the state that actually considers, in the first instance, the real detail around the choices that you're considering.
Okay.
In terms of whether or not it is preferable to go in limited amounts into the markets today to raise funding. I mean, the banks have the same issues. The banks are addressing, for example, whether or not they will, as they're doing, pay up higher rates on corporate deposits in order to be able to issue deposits that are not guaranteed by the state. We would certainly encourage them to do that, because that actually helps to reduce the level of support given by the state to the banks. But these are Treasury decisions that have to be taken as...
But I mean, it is possible that we could be in... Is it possible that we could be in two bailout programs concurrently?
I'm sorry?
Is it possible that we could be in two bailout programs concurrently? If we had to access the ESM because we couldn't afford, or we didn't like the price at which the markets are pricing Irish debt?
Essentially, yes, because what you would be looking at is tapping into the available sources of funding. Whether I'm not, at the moment, couldn't tell you whether I know the rules, whether you have to exhaust your first bailout first in terms of all the available funding before you can actually tap into the ESF. Maybe someone of my colleagues knows the answer to that. But essentially, the process of funding the state, bearing in mind that we are still running a deficit into next year, so we need to find funding to keep the lights on, will be a matter of looking at all available funding sources that we can tap into and using those to the best interests. And they will have certain trade-offs.
Okay. I mean, for example, is it in 2014 we have a large debt repayment to make?
Early 2014.
2014. What figure is that?
The remaining number is down. I mean, again, you don't have the remaining number. I mean, it used to be about 14 billion, but some of it was actually dealt with by the bond swap that was done earlier this year. So they have been actually working that down.